Hey folks, I got a great video for you today that you're not going to miss. Today, I want to talk about a topic that I think a lot of people get really confused about, and that is how do you invest in a context of geopolitical uncertainty? How do you invest in a macro environment of volatility? Now, a lot of people have been looking at AI, and today we have something that is been going on for the last few months that I've been talking about, saying that it would continue and exactly how to invest in this environment. So let's get right into it. I'm going to give you all of the tips and the things that I've been doing in the portfolio to reach financial independence. The next milestone and the goal is 2 million net worth. Right now we're at 1.4 million in net worth. And thanks all of you who've been a part of this journey. We're about like day 12. So we got 25 subscribers. So just thank you so much for being here. Let's go ahead and get into it. Today, the market has been selling off. And a large reason for that is because of what's going on. Something I've been talking about for the last few weeks is Iran. A fourth tanker was attacked. This has been something I've been talking about why this is going to continue and why there's going to be a back and forth. We've seen the tweets from Trump. We've seen that the peace deals and the meetings, and people say it's over and it's done with and we can move on, and oil's gone down and we're good and we're ready to move on. And I'm going to tell you that this is something that's going to be around for a while. And that I did a video on this, and I know that we would like to think that it's going to be over, but it's going to continue on for some time. So what did I do today? Today I've been buying the QQQ in the sell-off, the VGT. I got a little bit of international, VXUS, and VUG. These are ETFs, Vanguard Growth and Tech ETFs. And then I bought Microsoft and Meta. So that's what I've been doing in the portfolio today on the sell-off. And the reason is for Microsoft, this is just really historic times to be buying a company like Microsoft. In the PE ratio, look at 23. Price to earnings, 23 is very low for a company like Microsoft, a hyperscaler in AI. And then Meta's even lower at 22. So these are just really great deals, and it's really hard to pass up. And the reason is because the AI thesis for hyperscaling. I'm just going to show you one chart. I've put this up before, but it's now Meta and Microsoft lead new commitments in AI infrastructure race. So we've got two companies, some of the greatest companies in the world, that are trading at almost historically low PEs. And the amount of investment that's going in AI is at all-time highs. It's really kind of, the stars are lining up to be buying at these levels for what's coming in the next few years. And so if you take a look at the chart, you'll see that Microsoft, you'll see that Meta, their investment in AI infrastructure is massive. And so is Oracle, and so is Amazon and Google. And the reason why you have a company like Oracle, which I do have in the portfolio, a company like Oracle that's down 40+% is because the debt. They have so much debt. But Microsoft and Meta don't have as much debt, and they're very attractive. So the positioning in Microsoft and Meta, that's why I'm buying more. But I also want to talk about something I've seen recently, and that is position sizing. Some people, when they think they're investing, they just have a list of stocks that they buy. They just have a whole bunch of stocks in their portfolio, but they don't really have a purpose. And each stock in your portfolio, or each position or ETF should have a purpose. And my philosophy is, the first thing is you have to have a core. And that's why you see the core ETFs like SPY and QQQ for growth and VUG for growth. That's the core. And then around the core, you have the growth. And that would be my growth stocks. And so the Magnificent Seven. I also have Bitcoin as a speculative asset for growth. And this is how you build out a portfolio. Each position has a purpose. And then for even more compounding and growth, I have semis in the portfolio. And so semis they're going to grow even more and much quicker in half. And then we have dividends. There's an income part of the portfolio. Dividend companies aren't going to grow as fast, but that's not the purpose of them. And the purpose is to get cash flow so that you can reinvest it into the portfolio for more compounding. So you have dividend ETFs for that, like SCHD, and then you have dividend growth companies like, Visa, Waste Management, Texas Instruments. So that's the dividend part for income. And then you have another part for hedging. And this is very important because in a geopolitical situation like we have over in Iran with President Trump and oil, this is where I buy commodities and energy companies, energy ETFs. This is a very important part of the portfolio that I'm adding to in my brokerage account for early retirement, for stability, and then for even more protection in black swan events or buying precious metals like physical gold, silver, and platinum. And so that's how we're building out a portfolio in a brokerage. And each position has a specific size that is appropriate to risk management. And there's no one stock that is over 10% of the portfolio. The biggest position in the portfolio is SPY, and that is because it's part of the core. And then the biggest individual stock is NVIDIA, and that's growth, and it's not above 10%. So that is how we position for risk management. And it's very important. You can't just have one company that you're at 100% all in on, or the portfolio will get blown up. And unless you're really good at picking one stock. And so that is very important. And so how do I buy in this brokerage? Well, the answer is, if you're wondering, $4,500 a month, I'm shooting for like $5,000 a month in the brokerage. And the answer to that is cash flow. I have to have positive cash flow to keep buying in the brokerage account. So the last year I had about $100,000, $96,000 in cash flow. And this enables me to continue to buy and to build up the brokerage. And more recently, that is the shift that I've been making, is instead of focusing so much on retirement, I'm focusing on the taxable account so that I can use that for an early retirement. Now I'm going to build it up, and I'm focusing on growth right now, but eventually I'll move it more and more over to income and dividend paying ETFs. And so when we look at the situation today, the U.S., this is breaking news as they're recording a video, the U.S. removes Iran oil sales authorization after tanker attacks. This is just part of the tit for tat, the escalation, the de-escalation, the rug pull, the tweets, the meetings. It's going to keep going. And what that does is it causes oil to go up, obviously. And when this happens, it causes tech stocks and semiconductor stocks to sell off because it creates uncertainty, because it creates instability, it creates fear. And so with that, and the reason is because the macro, when oil goes up, it causes inflation. And when inflation goes up, then the Fed has to come in and increase interest rates. And then when the Fed increases interest rates, that is very bad for future earnings projections on tech stocks. And tech stocks prices bake in high future earnings growth in future valuations of those companies, and especially semiconductor stocks that are baking in extremely high valuations. But when the Fed comes in and hammers interest rates up and increases interest rates, then the future earnings of those companies, those projections, have to be reset. And that is why you see the decrease in pullbacks in semis today, and why you see the pullback in the market today. And I've been saying for weeks, this is going to continue. It's going to be a back and forth. So what do I do in the portfolio? It's the positioning. It's 5% in commodities and international. Commodities, what kind of commodities? Well, I'm glad you asked. VDE, Gunner, and Rio, and also have like Exxon and BP and Shell and Chevron. But VDE, I'll just show you. It's one of my favorite Vanguard ETFs. Today, it's up 3%. And that's what I mean by a hedge. So you hedge the portfolio with an energy ETF. So when you have a situation that happened today in Iran, which is going to continue on, and it causes oil to go up, well, then you have your portfolio plus 3% on the energy position, even though you might be down on tech or semis or growth. And so what's in VDE? It's ExxonMobil, it's at 21%, it's Chevron at 14%. And so you see the idea, these are all energy gas companies. So anyways, folks, that is all for today. I just wanted to let you in a little bit of insight on how I think about that, how I'm thinking about the geopolitical issues, and how I'm going to be building up the portfolio to reach financial independence for our next milestone. If you like this content, please feel free to drop a like, leave me a comment, let me know what you think. Thanks so much again for being here, and we'll catch you in the next video.